So we move now to part 2 of Standard Costing and Variance Analysis, chapter 23. In this particular part, we're going to focus just in on materials. And as I said with sales, I think the materials area, i.e. variances relating to materials, are fairly manageable. Let me explain. So let's think about materials. Remember that the focus within ACCA MA is broadly speaking on a manufacturing organization. So I guess we're presuming that the organization that we're dealing with is producing a product of some kind. So therefore, materials will be very, very relevant. So let's think about that variance. The materials total variance has to be the difference between the following. Okay, the amount that actual production should cost, i.e. the flexed material budget, and the amount that actual production did cost. This is the actual cost of materials. So let's slow down a little bit. What do we mean by this? Well, we're focusing in on the total variance. Now remember that we saw with sales that the total sales variance can be broken down into price and volume. Same thing here, but we're talking about usage. So in essence, what we're saying is this total material balance that we've experienced, that has resulted once we do our analysis, is really the difference between what it should cost our production and indeed what it did cost. Okay? Let's move further into the detail in terms of the analysis. So we're thinking about this materials total variance, and we're going to calculate it really and analyze it into two separate things, a little bit like we did with the sales. Certainly price, and then obviously usage. Okay? Now in terms of further detail, let's talk specifically now about the price variance. Now remember what we said about learning variance analysis. For me, the starting point is memorizing the formula, then applying it to questions. We don't need 100% full understanding right from the off. So let's think about it. The price variance, what does that actually mean? Well, it arises when the price paid for materials differs to the amount budgeted to be paid for materials in a given budget period. So in terms of the sort of breakdown or the calculation, as we'll see here, let me just move this down for you. In essence, the material price variance is going to be the difference between really two main things. The amount that actual direct materials should have cost, okay? And then the amount that actual materials did cost. So let's break that down into the formula. We see materials price variance here. Materials should have cost, in other words, budgeted. So based on, note, actual usage, this was the budgeted price. This was the pre-planned price. We're in touch with a range of suppliers. Perhaps we have one or two go-to suppliers. This was the price that we anticipated. Now, in actual fact, when we came to do our analysis, our variance analysis, materials did cost the following: actual usage times actual price. So note the difference between the two, and also note the sort of summarizing or abridged form is the way that I would learn this. I would just say probably AU times BP, and then again AU times AP. So it's the only thing that changes is the price, budgeted versus actual. So the difference between those two is going to be the materials price variance, either, note obviously, adverse or favorable. More detail now. In terms of working backwards, you'll see this section referred to in various parts of this variance analysis chapter. In essence, what we mean by working backwards is that the study course for MA and certainly FMA as well generally requires calculation from actual or standard figures where the variances may be given. Yeah. So obviously, in essence, working backwards, we really need to understand the mechanics in detail, particularly at the lower end variances, i.e. the basic ones, sales, materials, labor, etc. Okay? So note that we may not be required simply to calculate a variance. We may be given the variance and asked to work backwards. That's why rote learning and memory of the formulas, i.e. the calculations of it, is so important, because the examiner is going to put you in a position where you have to work in a number of different ways. Moving from there, when we think about materials price variance, it could be based, note, obviously, on the material purchased or possibly the amount used. Either or is acceptable, okay? So generally speaking, the MA exam will require calculation returns based on a purchase or production, okay? Now, note, it's normally assumed, usually assumed that production is equal to sales, okay? But note that if part of an operating statement is given, calculate materials based on production. So that's the general rule of thumb. That may lose a little bit in translation right just now within this video, but when you come to see the actual questions, if you've done the activities within the chapter already, you'll have an idea. But it's really with the OT questions themselves we can flush this out, okay? So moving from there, we're thinking that we have a materials price variance. What's the reason for that? Well, there could be a number of reasons. It could be cost of materials just increased and we didn't anticipate that, maybe a shortage of some kind. Maybe we had to use a different supplier, or suppliers change, or supplier had an issue, etc. Outside of that, perhaps there may be a discount in play in some way. Let's say, for example, we bought in bulk and we didn't anticipate, so that would certainly create a price variance. Outside of that, interesting one here, where higher or lower quality materials are used, they may affect the price paid. So for example, we happen to use higher quality materials, cost more, or we happen to use lower quality materials, they actually cost less. Okay, now do remember that in terms of the detail here, not just for materials, but also for sales and indeed for other variances, the reasons why variances occur are important to us. There's some amount of common sense, logic, if you will. For example, okay, we didn't use our go-to supplier, we used a different supplier, and they were slightly higher. Some of the other ones may require a little bit of thought, but my point is that there will be questions on the day that simply ask you to identify, well, why has this variance occurred? Not to calculate it, just identify why. So that is, for me, some cheap marks, okay? Some easy marks, if you will, okay? Now, the other side of the coin is usage. We said up top when we're talking about a materials total variance, we split it into two, price and usage. So what is this usage variance? Well, really what we're talking about is, a material usage variance arising when the amount of material used in the budget period differs to the amount budgeted to be used. So broadly speaking, I guess we're sort of looking at efficiency in one way. Let's dig deeper into this. In essence, when we think about this usage variance, it's going to be the difference, in effect, between these two things. Should have been used, i.e. the flex material budget quantity, and was used, actual quantity of material used. Okay, now there's a lot of information in these mind maps. There's a lot of information in the videos. Obviously, we're not going to be able to remember every single thing as we go from video to video. Let's just get a feel for it, memorize the basics, and work the questions. Okay. Now, in terms of a reconciliation, in terms of the total variance, clearly, as we've said really from the off, the total variance has to be a combo or a combination of these two. One might be favorable, one might be adverse. It could be the other way around. But the reconciliation will always invariably work. Okay? Outside of that, causes. So, a range of factors. Let me just even this up so you can get a feel for what's actually there. So usage, well, higher than expected levels of wastage, maybe lower than expected levels of wastage, possibly a change in the standard quantity, required for one unit for some reason or other. We didn't anticipate, but we had to use more, or in fact we used less. Here's an obvious one, an incorrect standard. We messed up from the off. We weren't on our game in terms of, well, how much material X will we be using? We got it wrong. Outside of that, perhaps higher quality material, which could result, in fact, the reverse of what we just said. In other words, lower waste. What about lower quality material? We had to go to the supplier, the material was lower, so we had to use more of it. So a number of different reasons, and remember what I said up top in terms of the importance of understanding what causes variance. For me, I think that style of question is probably easier than the calculation of the variance questions, for sure. Okay, so that concludes part 2, materials. As I've said from the off, we've sort of broken down this chapter into a number of different parts because it's long and a little bit complicated here and there. But so far, so good. Parts 1 and 2, reasonably manageable. We know what we have to learn and we know what we need to do. So thanks for listening.